Hey guys, Rafi here from the Endgame Investor. You can find me on Seeking Alpha under the pen name AstroLib. I came across a pretty amazing article today on CNBC of all places. I was flabbergasted when I read this article. I couldn't believe it. About rent inflation. So before we get there, this is the Bureau of Labor and Statistics CPI release from yesterday, August 11th. As I said in a previous video, used car prices, which have been pushing the CPI higher, have not come down in July. They have come up again. This is weighted, I think, 7.3, 7.6% in the CPI or something like that, some small number like that. In April, it went up by 10%, then another 7.3% in May. This is month-over-month statistics. Then another 10.5% in June. Everyone thought they were going to start plateauing, coming down. They did not come down. They went up again, another 0.2% month-over-month. So the year-over-year figures are still extremely elevated at 41.7. So no, used car prices are not coming down. Second, new vehicles. Up 0.5% in April, up another 1.6% in May, up another 2.0% in June, up another 1.7% in July, month-over-month. The figures are 6.4 year over year. The index for new vehicles rose 6.4%, the largest 12-month increase since the period ending January 1982. But here's the thing, that rent, shelter inflation, accounts for about 30% or a third of the CPI, something like that. Much, much higher than cars. About 3 times higher by weighting. Now, rent, shelter increased 0.4% month over month, 2.8%, that's it. Very interesting because we're getting reports of record rises in rent all over the country. The index for rent rose 0.2%, and the index for owner's equivalent rent increased 0.3%. Really? Really? All right, that's kind of hard to believe. The mainstream media vanguard, the Praetorian Guard that protects the Fed as if it's a little baby. Here's what they have to say. You can tell they sounded very reluctant to even report this, and they were trying to be apologetic. Inflation was hot in July, but rent isn't showing up yet and could drive prices higher. Rent isn't showing up yet. That's peculiar. So the article starts to get skeptical around here. Economists say there are signs the spike in inflation is temporary, as Federal Reserve officials have contended. So that's the official party line they gotta stick in there. But one big part of consumers' out-of-pocket expenditures is rent, and that is expected to rise well into the future. Private sector reports show double-digit increases in rents across the U.S. this year. But the Consumer Price Index actually showed a slight moderation in rental price gains in July. Economists say that should change as the Bureau of Labor and Statistics data catches up to reality. And the increases should be enough to keep the debate about whether rising inflation is temporary. Keep the debate going? Okay, so you see they're trying to twist. It should be enough to end the debate. So now there's this quote from this guy named Zandy. I don't know who he is. He pointed to data from Yardi Matrix, an analytics company that studies commercial real estate, which shows the multifamily rental industry had a record-setting month in July. Record-setting month in July, with rents rising 8.3% year over year and single-family rentals up 12.8%. He said because of the Bureau of Labor Statistics methodology, the rent increases will show up in CPI later. Okay, so he's saying, oh, it's not intentionalized, just like they push off these statistics somehow in their statistical fiddling, meddling, massaging, whatever it is they do. What I found most intriguing and most amazing about this article is actually how one-sided it was on the inflation side for a mainstream rag. Every economist they quoted were saying that the rent increases in the CPI are basically lies. And they did it diplomatically and nicely. They don't want to come out, angry and against the establishment, but that's what they're saying. That's clearly from what this article is saying. Now, this is something I took from Zillow. Here we have a calculation I made of year-over-year rental changes in rental prices, average for each city. And I organized it from low to high. So we see the year-over-year numbers, and these are from June 2020 to June 2021. Those are the latest numbers in this Excel. So from low to high, you see the cities that are falling, have falling rents. And those are San Francisco, New York, San Jose, Boston, Washington, D.C., Seattle, and Chicago. What do all of these places have in common? Severe lockdowns, extreme policies when it comes to certain health issues, and defunding the police and other interesting political stuff. And everywhere else, they're rising. I took all these numbers and we type in average. You get 7.23%. What's really important about the CNBC article is that this is the vanguard. And if they are protesting BLS's inaccurate data reporting, then the Praetorian Guard of the financial establishment is showing a crack in its formerly united front. And that is very encouraging from truth hunters. So what I'm saying is the CPI is headed much higher over the next few months, and that has psychological importance. And people are going to start to realize that it's not going to stop. And once you have that positive feedback loop activated, everything changes. Everything changes. Gold leads instead of follows monetary policy. And we approach 1978 to 1980 when gold quintupled in 2 years. The entire financial system is going to be ripped apart at the seams. You better own real money before that happens. Because if you own just the substitutes, or the substitutes for the substitutes, which is Bitcoin, you're going to be screwed. This is the Endgame Investor. You can find me at the link in the description below. Please sign up for a 2-week free trial. No risks, no questions asked. Well, you can ask questions and I'll answer them. I do that. And have a good day. Have a nice, inflated evening.